So how do you view a stock like a Nordstrom, which of course is facing all sorts of other issues that other retailers are in terms of supply chain issues, but it's this notion of this comp that didn't quite stack up to pre-pandemic levels?
Yeah, and that's exactly right. That's spot on. That's why the stock is down. High expectations headed in after Kohl's, Macy's, Urban all posted better than expected numbers versus 2019. So for Nordstrom to be down versus these other names to be up, I mean, Urban was up 20% from 19, and the other two companies, Kohl's and Macy's, up about 2% from 19 levels. And I think also the margin numbers, operating margins, were much below plan, and that's disappointing too, on top of a stock it's up 25% year to date and it trades at 27 times earnings, so it's not cheap.
Is retail where you want to be, Steph? I mean, as you mentioned, some retailers had stellar reports, and then you lump in Best Buy, that just showed, a consumer with an insatiable appetite for all things technology, even still this far into the pandemic. And I'm wondering where you'd want to put your money.
Yeah, I mean, I think the consumer is just fine. Anybody that says the consumer is hurting or rolling over, I just don't agree with. Look at Home Depot and their reports. Look at Lowe's and their report. TJX was stellar, and they had the best margin since the second quarter of 2016 on top of huge top-line numbers, and they talked about getting pricing power and taking market share. So I think there's a Best Buy, there's a TJX, and by the way, both of them, are very cheap, and they haven't done as well as some of these other names. And so I think you want to pick your spots, but I think the consumer is just fine.
The vicious snapback rally in Chinese tech stocks, Steph. Are you a buyer?
Hard to be a buyer of anything pure play China, because you wake up one day and then the government decides to do something that you don't anticipate. So it doesn't trade really on fundamentals. Now, that being said, I do think these stocks, all of them across the board, they just got slaughtered, right? Along with the meme stocks. And so what I think has happened in the last couple of days, Melissa, sort of interesting. We've seen another rotation. Remember we talked about how that 2021 has been a year of rotation. January through May, it was value versus growth. May to end of July, it was growth over value. And now, in the last couple of days, we've seen a return to the cyclicals and to the reopen names, a little bit more value versus growth, and a risk-on feel, which is why I think the meme stocks have done well. And I think it all has to do with Delta. I mean, the UK, we've seen a rollover in Delta cases. Same with India. Looks like in the US, the rate of increases in the hospitalizations are actually slowing, which is a good sign. And China actually reopened their ports. So it seems to me like China might have a control on their Delta situation. You add up China also opening up Macau, and the Fed likely to be accommodative and dovish on Friday, and then you have all these cyclical reopen names down 20, 30, 40%. I kind of feel like you can see a bounce back, and that includes, again, meme and also the Chinese tech stocks.